Trading success is not easy. In the first year, you think you need intelligence. But after a few years, you will realize that all you need is emotional control. Remember to stay calm, stay disciplined, and keep learning.
I'd like to welcome you guys back to another episode of Wealth Wise Guru. And I'm your host, John Shaft. And we are at the opening of the bell of the final trading day of the week. And it is Friday. I do believe it's August the 23rd, 2024. And it looks like we're going to start out this morning with the stocks continually to sell off. It's kind of going back and forth, so it's kind of hard to say. But some stocks are selling off. They seem to be selling off. It's probably what it is people are continually to take profit out of the market, and that causes a lot of volatility and a lot of movement in the market when people are taking profit. It doesn't mean anything is wrong with the particular company that you are invested in. It's just that you have a lot of people, when they have extra money or when they have made extra money, they want that money taken out of the market and put in their pocket. And so I am not one of them. I like to keep my money in my portfolio and continually to build wealth. One thing about trading in the stock market, when you start to take profit out of it, like some people do, the government will come back and hit you with capital gains taxes. And so yes, you do have to pay taxes on this money. No money anywhere is free. So the government wants their share of their cut. So you guys have to be careful about taking profit out of it in such a manner. Because anytime you're investing in the market, especially if you've been into it as long as I have, and you have the experience and education, and you kind of know what you're doing, you can make a nice little profit investing in the stock market. And I even go even further than just standard equity trading. I always say I do equity trading, which is standard trading, and I do option trading. I do day trading, and I do spreads, and just as well. And I'm a swing trader. So I do it all. And like I said, I have been investing in the market for a little over 10 years now. And I actually started out around 52, 53. So now I am 62, working on 63. So I'm at retirement age. Matter of fact, I just retired earlier this year. And so, but yeah, I'm still hands down investing in the market. And I know people are way older than I am, and they are also still investing in the market. Especially Warren Buffett. Warren Buffett's in his 90s, and he still invest in the market. So I don't really look at myself as being old or anything like that. I just look at myself as being more seasoned and more educated and more wisdom. So now is the time for me to try to give back to the community that I have come from, of society that I have come from. And so that's why I built this YouTube channel, trying to teach you guys how to invest in the stock market and how you can also make yourself a profit. Like I always say, you do not have to do option trading or day trading or swing trading as I do. You can do standard trading as long as you have, especially if you're new to the market. And then I would not encourage you to pick individual stocks as I do. As you can see by looking at my portfolio, I have a lot of invested in independent stocks because I know how to pick and research a particular stock before I pick it. So if you're new to the market, I would encourage you to start out with the S&P 500, which is called the SPY. That's the sticker symbol, SPY, and then you can have the what you call the Magnificent Seven in your portfolio. And again, the Magnificent Seven is Google, Amazon, Facebook, Microsoft, Tesla. I guess Tesla is still part of that Magnificent Seven. And I guess that was all of them. Let me double check. But you can't go wrong with having the Magnificent Seven in your portfolio. The Magnificent Seven or the high tech companies. But like I say, the Magnificent Seven, Tesla, Meta, which is formerly Facebook, Apple, let's see, that's Goldman Sachs now, Google, Amazon, and Google has two positions. I think it's A, and C. Same as Berkshire Hathaway, Warren Buffett company. He has two positions. He has A and C. If you invest in A, which you wouldn't be able to afford, it would cost you over $400,000 just for one particular share. And Microsoft as well is a part of the Magnificent Seven. And this is why this is why they have the what you call the pullback in the market. You can see the prices of some of these stocks. Let me click on one to show you, for instance, what I'm talking about. See, this is also a wonderful stock to have. It's called Alibaba. Alibaba is I think it's a Chinese stock. Alibaba in the Asian world or in China is same as Walmart to America, and it's a wonderful stock to also have. I don't have too many positions in it right now, but it might change over a period of time. It was founded in 1999, by Young Ming Eddie Wong, and headquarters in Zingi. The gang, I can't pronounce that. I think that's got to be China. And like I said, this is also a wonderful stock to have. It's definitely in China. Actually, I think it's part of in what's called Hong Kong. But like I said, if you don't have to do option trading and swing trading and all that kind of stuff right now, if you are new to the market, simply because you don't have enough experience. The best thing that you can do is continually to watch videos like this of investors that actually trade in the market on YouTube. I am a actual investor. I trade in real time in the market, and this is my portfolio that you see in real lifetime. I am not a YouTuber trying to get views. I am a stock market investor that uses YouTube platforms in order to teach you how you can make a profit and invest in the stock market as I have. I can teach you how to swing trade, how to day trade, and how to option trade and standard trading. All you have to do is just follow my videos. Each videos are or maybe long in length, simply because this is a educational channel, and I cannot teach you this stuff in 5 or 10 minutes. So you're looking for a 5 or 10 minute fix. This is not it. You have to take time, sit, concentrate, and learn what I am here to teach you. And a lot of this stuff you will not get overnight. You have to put some of these things that I'm saying into place. You have to actually practice it and make a move. If you don't, you will never learn. And you need to have available to you at least $500 to $1,000 a month in order to invest properly in the stock market. You need $500 to $600 just to open up an account, which nowadays is just a drop in the bucket. 30, 40 years ago, if you wanted to invest in the stock market, you did not have investment apps like this. You had to find a particular broker, go into their office, fill out all kinds of paperwork, and then you had to have at least $10,000 in your pocket just to open up an account. And you will leave it all up in the hands of the broker. You will then have no say so in it at all. And now we're living in the age of information where it is literally at your or in your hands or at your hand tips. So there's no excuses why you cannot make money or earn money or gain profit from investing in the stock market. You can still, it's simply sit here. You can sit here and see it right before your eyes. It's I hear a lot of people complain about not having enough money to invest or to do this and to do that. A lot of times you do have enough money, you just need to learn to prioritize where you put your money. And once you open up one of these brokers accounts, especially with Robinhood, You can actually do what they call fractional shares. Fractional shares, you can actually trade with $5 with fractional share, just to start. And like I say, you ain't trying to do option trading, day trading, and swing trading right out the door. And so you need to just build up your portfolio. You find your favorite company and try to own at least 100 shares each of that company. And yes, it's going to take you a while or a period of time, because these stocks or company stocks and companies make a whole lot of money. Uh, if we did not have the pullback as what we do have, you as a retailer or an individual trader could not afford to invest in these stocks. So if you research whatever stock that you are interested in, some stocks are still going to be too pricey for you. And you do have what we call penny stocks that you can invest in. And you can buy 100 shares of a particular penny stock as long as you research the company and see that it is a good company. You can buy 100 shares of it, just like that, because of the price is not so great. This one here is $179, so that might be too rich for some of y'all. Yeah, some companies that are actually like this one, for instance, it's $36. Hell, if this one is too high, you got some even lower. See what this one is. This is AutoZone. But see, this is a prime example of a company that has been around a long time. Look at the share price of it. For some reason or other, it's not coming up fully like it's supposed to. But look at the share price of it. That's $3,170 just for one share. And it's down today at 63 cents. 63% is down. Well, as you can see, I only have $4.29 in this particular company. It's a great company. It's been around a long time. This would be considered as one of these blue chip companies. And of course, I'm not gonna pay no $3,000 just for one share. Are you crazy? That's too expensive. But you can do what you call fractional shares. Fractional shares, you just simply hit trade, hit buy, and then you go up to the top here where they say dollar. Dollar means fractional share. You can do $5 or you can do $10. Then if you want to buy the whole share, you just switch on that and change it over to shares. See, now you just put in how many shares you want, which is one on top, or two, or whatever you want to put. And this is how much it will cost you. So if I bought 2 shares, put in 2, this is how much I had to pay. See, I can't afford that right now. I only have $2,800 of trading power, so I would definitely want to buy that. So what I would do, if I want a piece of that, I just simply click on dollar, which is fractional. Like I said, I could put in $2, I can put in $5, or what have you. Just click that and go up, and there it is. So let me show you this for example. I just bought $5 shares in AutoZone. I just did that just to show you guys an example of how it could be done. And if you try to do a option trade or trade option on this particular account, man, you ain't gonna tell you how much it will cost you. But account like this, I would probably do a leap. So let's see what a leap would look like. So let's click on March 21st, 2025. Like I said, the leaps are the best trade to do, uh, especially if you own 100 shares of any particular stock. If you buy a call, which means that you are expecting for a particular stock to go up in value, then you need to own 100 shares of that particular company. And $3,170 times 100. So you do the math. So that stock would be definitely too expensive for me to own. So even I couldn't. But a lot of times when you do a call, I mean do a option trade, you don't have to pay quite as much as you would the full price of a stock. That's why they call it an option strategy. Option strategies are nothing more than a contract between you, the buyer, and the seller. They are individual contracts, individual traders in the market. So you can buy a call or you can buy a put. Buy a call means that it is going up in value. Buying a put means that it is you are expecting for it to go down in value. This is the striking point right now of AutoZone, which is $3,170 per share. Anything above that striking point is out of the money. Anything below it is into the money. And then you have to make sure when you want to do such a trade, you click on buy and call. You have to make sure it's important that you click on any of these two symbols. You buy a call when you're expecting for it to go up in value, and you buy it because you do not own 100 shares. You cannot afford 100 shares of this company. I know I cannot afford 100 shares of this particular company, so I cannot sell the shares because I do not own. I cannot sell something that I do not own. I cannot afford it. So I would, like I say, anything above the striking point would be out of the money when it's a call. Anything below it would be into the money when it's a call. When it's a put, you click on buy and put. It works in the opposite direction. Anything below the striking point in a put, anything below would be out of the money, and anything above it, the striking point, will be into the money. So buying a put means that you are expecting for a particular stock to go down in value. And so when you're doing these trades, you have to definitely look and watch these particular trades. You just don't make a trade and then go on about your day. You have to really sit down and sometime and watch them, just in case the trade go against you. You can move out of that position, and then usually a good sign of a trade that is going against you. If it just depends on your tolerance level. 20%, I'm already looking trying to figure out what's going on. If it reached 50%, then if it reached 50%, I'm about ready to. Just depends on what company it is. I'm about ready to roll out into a new position, or I'll just simply sell it or close out that position, and at least I can take still half of my profit. So if we were going to do a call, let's hit buy and call. Let's click on $4,000. I'm just doing this just for simple demonstration. All right. This one would not be a good strategy at all. Why I say that? Because it's the volatility is only 14.89%. The IV is volatility. Volume is 0. That means there's no contracts currently in the system against this particular stock, and there's no interest. And right here it tells you your profit percentage is 0.01%. So you definitely would not want to do anything with this. And just say you had a particular stock that you want to watch, and you're not ready to buy it yet. Just add it to the watch list. You add it to the watch list, just like this here. This is what you call a watch list. This is what you guys. I'm glad this came up. This is what you call a watch list. This is my watch list position on this particular company here. Let's see what company is this. This is a call that I have on my watch list. It's valued at $159. I put it in the watch list 8/3/2024. Striking expiration date is 2/21/25, so it happens to be a leap. Break even is 171.07. Current price is 103, and today's return on it is less than $18. Total return I made so far since I had it is only $52. So I'm not too impressed with this. I'm just watching it, and so if the number was greater than what it is, let's click on view and see what actual company this is. Okay, it's Microtron Technology. So if I wanted to purchase this particular option strategy, I would simply go out here to trade, hit trade, and then hit buy. And then I'll go up to what should I get off? That's my email stuff. I hate when that does that. I will simply hit 1, 2, 3, 4, 5, however many shares I want in this particular strategy here. So for instance, we just hit 1 over here. We'll say limited price. This is still bid price to the left here. It's starting out at 119 and asking 204. So usually you have a good chance of this going through or being accepted into the system when you pick the highest number, which is 204. So we're going to just type in 2.04. So the maximum cost for this particular position will be $204. So we're gonna go down here. See, it had the unlimited price, break even price is at 172, and then maximum loss. So we're gonna go down and break it down and see what it looked like when it's broken down. So you'll click on that. That's the beauty about doing the options too, is that this is your loss. This is all your maximum loss could be, which is $204. This is your maximum loss that you can lose on this particular strategy. That's good because your losses is locked in. This is what you call controlling or managing your losses. So if the stock was to go against you, you'll only lose $204. But what you do not want to do is put a strategy in a particular calendar year, whether it be week, whether it be day to day, month to month, year to year. You do not want a particular you do not want to hold a particular stock until it reaches maturity date. That's why it is kind of best to at least go out like 3 months, 4 months, 5 months, 6 months, give them that particular stock strategy a chance to grow. But there are some people that does do day-to-day strategies or week-to-week strategies, and that is more into the swing trading and day trading. And you have to really have time to sit and watch such a position. You cannot put those kind of strategies in and not watch them. You will lose money every time. So you would need to know when to get in and when to get out of a position. And if we bought this particular position, this is the profit. Look at that. You can't tell me that's not no good money. That's good money. Look at that. Look at the expected profit of this particular strategy. See? Trying to see if I want to. Okay, this is what you call a leap. This 221, 225. So this is almost too good to not go through on this particular strategy. So we're gonna go through on this morning. You just simply click on buy and go up, and the order will see. You can see the order has been filled. And let's see here. We'll go out of that position. We look at it. And let's see, we'll go out here and trying to find that particular stock I just put in. And you got to excuse me for using my cell phone. I have a big mini Mac Apple computer. Cost me darn near $4,000, and I'm still learning how to use the darn thing. It's so sophisticated. After a week, it locked me out. I had to take the whole system back to Apple to in order to get me back in. But it's still, I'm still that thing's so sophisticated, man. I'm still trying to learn how to use it. So you guys have to bear with me using this cell phone system. Certificate check right now is at 29,000 climbing, and my account is kind of at risk this morning of a margin call due to the volatility in the market. Like I always say, if you want to get rid of that high risk margin call, you just simply sell off some stocks or simply just make a deposit. So I'm just let it ride out. So maybe the stock will gain value today as time goes on. And if it does gain value as time goes on, then this particular number here will disappear. And so we're going to look at this is my option trades. So we're going to look at the particular trade that I just did. I also did a put overnight in Urban. Urban is a department store. Urban Outfitters, they having a hard time right now, which all of the retailers are having a hard time right now in the market. So I actually did a put after I did some research on this company. It's been really been hammered in the market. So that's why they just put. I figured it would continue to sell off. And as you can see, I am a heavy hitter when it comes to the bidder. I have about 12 to 13 different positions in the bidder, and we are eagerly expecting and waiting for the bidder earnings report to come out. I do believe next Wednesday, which will be August the 28th, 2024. Right now, this particular call is up. I gained $1,000 on it, and so you have that's the beauty too by doing the option. You can do as many options you can, or as many as you want on the same company, or you can just diversify it and do different companies. So this is the one I just did. This is, like I said, this is microtron technology, and I got 1.3 uh, position of shares in it. The value right now is $136. Uh, and right now today it's in the negative, and for so far it's $11 and 46 cents gain on it. And this is what you call a leap strategy. So I don't have to watch it as much because it is due in 2025. But if the stocks start to go against me, say I start to lose money, I'll just simply hit option, and trade option. Okay, right now it's not doing it because of the I just put in this particular strategy. But what usually would happen if I had it for a long time, you'll hit trade, and then you'll have a lot more different positions that will come up here uh, when it comes to this particular strategy. And one of these strategies would be roll out roll out of a position. So if it start to go against you, you could simply roll out of that position. And you roll out of that position by clicking another position, either higher or lower than the current position or strategy that you already have, and you go out to a different calendar date, month, or either a year, or you could even if it's a leap, it's way out, say 2026, then you can actually hit trade the option and go to year 2025, wherever you're comfortable with, or either vice versa. And so you can either roll out of that position and roll into a new position, thereby managing your losses. And I have done that, and and rolled into another position, and the stock was going against me, and it was actually like five. I was down to like $5 left of that particular strategy. I rolled out into a new position and did like three. I think it was like 90 days, and I actually made $1,500 off of the stock that was down to $5 left for that particular strategy. So doing option trading is very lucrative if you take time to invest in yourself and learn what you are doing. Right, and things like what you have to learn and teach yourself, or learn from the others. It's like the Greeks. See, you have to learn what the Greeks mean when it comes to trading. Uh, if you go back to some of my earlier videos, you'll hear me explaining to you what the actually Greeks means, because all these symbols mean something. And if you don't know what they means, man, you can actually lose a whole lot of money because you actually don't know what you're doing. And if you don't know what you're doing, then you shouldn't be doing. You shouldn't be doing option trading. Thing about Robinhood is Robinhood asks you, uh, uh, it put you through a series of tests when you open up an account. If you want to do option trading, if you have a new account, then you're not going to be qualified to do option trading. They're not going to even prove your account to do option trading. My particular account right now is approved to do option trading, obviously, and I'm at level 3. And level 3 is the highest. As you can see, I still get that morning margin call. I don't know why. I don't know why they keep sending me that for. Stocks are going up. Anyway, we'll keep on watching it. This is a particular Nevada position that I'm in is a put. So right now the NVIDIA is going up in value. It's a put. I put this put in place just in case. Uh, Actually, it's not even a signed contract. It's what you call on my watch list. Uh, so uh, right now it is negative $1,000. Negative return today is $42. So I definitely would not want to move or do anything on this particular contract, simply because uh, it's already losing money. And of course, it's losing money because it's a put. Remember when I say a put means that you expect for it to go down in value. I just put, and as I was saying, I put this particular strategy, which is a put in the bid. I put this in place just in case the earnings report goes the other way. And usually, a good rule of thumb is to close out of a position, sale prior to a company earnings call, and usually that's what I do. But since it is NVIDIA, and we are anticipating that she would do significantly better than expected, I'm going to go ahead and try to ride this train on out. But usually, in most cases, when you're coming up on a earning call and you have, because I have already made money, as you can see, in the video. This one here, this particular position is almost $10,000. This one is 2,000. Like I said, I have 12 different positions right now in the video. So right now we're going to just ride this out and see what happens. But normally, if you was coming up on earnings call, yeah, you would just simply trade out of that position, and then after the earning calls, then you could decide then whether or not you want to jump back into that particular position. I am John Schaff, and you are tuned into another episode of Wealth Wise Guru. And we are at the trading end of the trading week of August 2023, 2024. And again, let me show you guys another particular app that goes well with your investment app. And it's called ROI, or our face down here. There you go. ROI is a supporting app that goes with your stock portfolio. Gives you a better outline and better outlook of your portfolio as a whole. And you can see what my net worth is right now. And my particular goal is to try to get to $1 million. And I am working on what you call generational wealth, meaning that I'm trying to build a portfolio that I can in turn hand down to my children and grandchildren should something happens to me. And right now, all my stocks I have together, I have 175 stocks, and they are valued at $85,000. I have 31 holdings in ETFs, valued at $4,647. Options, I have 21 holdings in options, valued at $61,000. Crypto is self-explanatory. I really don't invest in crypto. And I would strongly encourage you to get this particular app. You can trade. You can trade as your favorite trader, whichever your favorite trader is. If you can see, as you can see, even your Congress heavily invested in the stock market. And let's see what Congress trading in today. This is the real thing. It's not fake. This is the real deal. This is what whenever your politicians and famous influence are invested in the market, then their trades become public. And this particular app shows you what they're actually doing, what they're trading in. In this case, this is your Congress as a whole also invest in the market. And as you can see, this is some of their strategy. Right now, they at 77.9% in the EBITDA. And you go on and you see all the other different companies that they are investing in. And this is how some of your congressmen, senators, and presidents get rich after they come in office by investing into the market. So if you want to invest like your favorite congressman or favorite influencer, you just simply click on their profile, and then you go down here and hit invest, and then you type in one of these amounts. I think the maximum amount is $500, and the minimum I think is $15. In my case, my maximum will be $1,100. This particular popular Congress buy has 10 positions, and this is their current position that they are currently investing in. And so this is a wonderful app, and you can grow your portfolio and have the same different position in your portfolio as your congressmen, senators, even Warren Buffett, Berkshire Hathaway. Warren Buffett, as you see, is on top. And these are the different positions that he's currently invested in. He has 42.2% in Apple, 12.4% in Bank of America, 10.8% in American Express, and so on. Coca-Cola, which is a blue chip company. Blue chip companies have been around a long time. If you are a regular standard investor, you can't go wrong by adding blue chip companies into your portfolio. You just do a standard trade on that particular company. And a standard trade where you will buy a stake in that particular company and just simply keep it and wait for it to go up in value. When it goes up in value, then that's when your profit come in. And then you can take profit off of it, but do not sell out that particular company. You always want to keep your cash cow. You can take profit, only take profit when it's in the green, not in the red. The red means it is time to build, and green means that you can take profit off of it if you so do so. This is Wealth Wise Guru. I'm your host, John Shaft. We're going to take another temperature check right quick, and then we're going to close out this particular video. Right now it's up at $2,000. Trading, I have a investing interest right now, $31,000. I ask you to hit the like button, share button, and subscribe to my channel. And hit the notification button so you will know when we are doing a upload. Happy trading, and we will see you guys again in the next video upload. Thank you for watching. Hope you guys have a safe and prosperous weekend. And we'll see you guys back here again on Monday. If it's not, maybe sooner, I will make another video over the weekend. Again, we thank you for watching.
Tired of being broke? Want financial freedom? Then stop whining and start acting. Sick of your situation? What are you actually doing about it? Complaining won't fix your finances. Track every damn penny, slash those useless expenses, and crush your debt like it owes you. Start investing now, no excuses. Sitting around won't change a thing. It's time to hustle, grind, and make your money work for you. Financial freedom isn't a handout, it's a fight. So, are you ready to stop talking and start taking control? Prove it, or stay stuck forever.